Consumer price inflation has continued on a downward trajectory, reaching the lowest level in about 4 years. CPI slowed further in October, better than market expectations. Data from SABC shows the annual consumer price inflation was 2.8%, down from 3.8% in September. Housing and utilities, miscellaneous goods and services, and food and non-alcoholic beverages were the main positive contributors to the 2.8% annual inflation rate. Transport was the main negative contributor. Well below the midpoint of the Reserve Bank's target range, making a good case for another interest rate cut. The central bank will announce its interest rate decision tomorrow afternoon, widely expected by experts to be cut by 25 basis points. Let's bring in Johan Els, who's the chief economist at Old Mutual, to make sense of the latest inflation figures. Welcome to On Point, Johan. Falling fuel prices obviously now remain the primary factor. In fact, I can't believe that we're at a point where we're talking about fuel prices being down. At some point, we were paying around 21 Rand fuel. And how are the tensions in the Middle East, when we look at global factors, likely to put a brake on this momentum?
Seems those tensions have eased a little bit. The oil price remains well contained. And I think, of course, that remains a big risk, that any escalation there could lead to higher oil and thus petrol prices in South Africa. But for now, it seems very much under control. And then in South Africa, specifically in terms of inflation, not only food and fuel, but also consumer goods. If you look at the weighted average of clothing, footwear, furniture, appliances and vehicles, all those stuff that you and I spend our money on, that's only 1.9% on a year-on-year basis. So as you rightly said, inflation below the bottom end of the 3 to 6% target range, but also very little inflationary pressures across food, across fuel and across consumer goods. So there's no demand pressure on prices.
Right, food inflation is also at its lowest since November 2019. Prices still climbing, but at a slower pace. When do you think consumers will begin to feel these effects of softer food prices, I beg your pardon?
That's on food and fuel, that's valid for both. I think we're starting to see that within food, some of the prices are actually declining and others, as you say, are just increasing at a slower pace. But we've actually seen some price declines in some of the components as well. And that's important because that's where we then are more able to spend our money. Fuel prices also declining. There's some other areas where even thus prices are still rising, but at a lower pace. That puts positive spin on the potential for consumers to start spending again, just that lower increase in prices. Plus then the benefit that it eventually brings in terms of potential for rate cuts.
We also will be expecting some retail sales figures later this afternoon. What has your department been looking at in terms of what you think the forecast would be of retail sales, speaking of, consumers and their buying patterns?
So despite over the last 2 years that we had the higher inflation and the higher interest rates, we've seen some employment growth, positive employment growth, and that's been positive in terms of supporting consumers. And more recently, the lower petrol price increases or the petrol price decreases that we've seen, that has helped consumers in terms of their ability to spend. Plus, of course, some consumers have taken advantage of this two-pot pension fund system to extract some of their pension monies. So I think retail sales will actually be performing pretty okay. And I think we can also expect a good season around Black Friday and the Christmas season because consumers are starting to have a little bit more money in their pockets to spend.
Yeah, I want us to go back a little bit to the food inflation. There's a graph that you will see that will be our team will be putting up shortly, looking at food prices of fish, fresh fruit and vegetables as well as meat prices. These are likely to form a decision for the consumers as they go to the shops, and they'll most likely will be comparing. Do you think that consumers will be looking at finding it that prices are slightly lower, or maybe the rate of increases has halted a bit?
Absolutely. Absolutely. In terms of meat specifically, meat prices have actually fallen between September and October. So that is very important in terms of where consumers start to spend. We've seen fish prices falling, milk, egg, and cheese prices falling in the month. Not significantly, but at least lower prices in October relative to September. So that's part of the overall process of just lower price increases in overall food inflation.
Johan, the central bank tomorrow is set to announce its decision for interest rates, seen the first 25 basis cut point. What is Old Mutual's forecast? 25, 50 basis points?
I think given where inflation sits at the moment, the recent trends in inflation, the Reserve Bank should actually be cutting rates by 50 basis points. I don't think they should stick to 25. The conditions are ripe for 50 basis point rate cut. But I think the Reserve Bank might highlight risks around the incoming US administration and their policies next year as risk on top of rand risks. And I think the Reserve Bank will actually be conservative in their decision and stick to 25 basis point rate cut. I think, as I said, conditions are ripe for 50 basis point rate cut. That would be more in line with the underlying inflation trends that we've seen. But I think they're going to highlight the risks and stick to 25.
Yeah. As we conclude our conversation, your outlook for inflation, given the global dynamics that you've just made reference to, and some local factors such as the production challenges in the agricultural sector, what do you forecast as an outlook for inflation for 2024 and maybe the first quarter of 25?
So very important, I think this October number, both in terms of food inflation and in terms of the headline inflation, was probably the lower turning point in the cycle. In other words, it's not going to continue to decline over the next few months. I think it's going to drift up, but drift up slowly. I think headline inflation can stay below 4% deep into next year, and thus below the midpoint of the target range, below 4.5%. I think food inflation will also drift up slightly, but food inflation will also likely stay below 4% for deep into next year. So the underlying picture for inflation, even though inflation will drift higher slightly, it's nothing serious. It's very much under control and very much below the target that the Reserve Bank has for inflation.
Yeah, and in the first quarter of next year, when the MPC meets, your forecast tells me that we're likely to get yet another cut should conditions be all right, of course.
I think so, absolutely. If the rand behaves, the rand stays relatively stable, oil prices stay stable, the other price trends are still conducive to more rate cuts into next year.
Johan Els, who's the chief economist at Old Mutual, thank you so much for your time. We've been speaking to Johan Els about the latest inflation figures as released by Stats SA earlier today.